Good afternoon, everyone, and welcome to our January 2021 Hot Stock Panel. My name is Glenn Tompkins, Senior Instructor here at VectorVest. Always glad to be here for our Hot Stock Panels. I will be your host for today. Also with me, I have two of my most esteemed colleagues, Patrick France and Clayton Deberte. They will be joining me today for our Hot Stock Panels, and that's what it's all about. A little bit about me. I've been here for 16 years with VectorVest. I'm primarily caught up in the Jockey Club in the mornings, Monday through Friday, which is our trading rooms. I host the Hot Stock Panels every month, and I also have a segment on YouTube called Trending Thursdays where we look at stocks that are making the news. So primarily that's what I do. I think for the upcoming year, I will be doing more YouTube content. So stay tuned for that as it happens. All right. So that's a little bit about me. VectorVest, for those of you who are new, VectorVest has been around over 30 years. We analyze stocks better than anybody else out there. And we've got logarithmic calculations. That's a good word. I don't know, logarithmic. Listen, they're mathematical equations to help you to see what a stock is worth, if it's going up or down in price, if it's the right time to buy or sell or hold. All right, so it's beyond what you get here on YouTube, just in general about, hey, buy this stock, or I'm going to buy these top 3 stocks. It's interesting how those people do that, and they don't tell you how they find the stocks or what, or if it's a long term, or if it's the right time to get in, or when to get out. So we pride ourselves on being able to take investing to the next level to give you the information you need, not just data to listen to. All right, so that's what's going to be on display today. Hot stock panel. The 3 of us will come up with stocks that we like. We'll tell you why we like them. We will give you clear-cut signs to know if it's okay to buy now or not, and if so, when to get in and when to get out. All right, so again, we go above and beyond what a lot of content here on YouTube is all about. We really pride ourselves on that. We talk about market timing from a market timing perspective, and if it's okay to be in the market or not in the market right now. Currently, our analysis shows that the market is still toppy, but I think that everybody knows that the market at this point is overextended. When does the top happen? Well, I'll give you the secret of knowing when the top happens. Everybody come in real close. Everybody come in real close. The secret to knowing when the stock market is topped is when it stops going up and it starts going down. Boom! That's the secret. That's the secret right there of knowing when the market is toppy. But we have an indicator that lets you know when the market is toppy. Again, my colleagues will introduce themselves before they start to talk about their stocks, so you get a feel of what they do here at VectorVest. I love the crew that we have here because of the myriad of different things that we do. Patrick does a lot on Facebook. Clayton and I do a lot on YouTube. So put that together, I think we've got the social media platform well in hand to keep you guys on top of what's going on. If you like the content, especially if you're new, don't be afraid to hit the like button. All right. If you're also new and you haven't subscribed to the channel, we've got an aggressive goal this year for subscribers to the channel. So if you like what you see, if your subscribe button at the bottom of this video is still red, that means you haven't subscribed to the channel. All right. We invite you to subscribe to the channel, and don't forget to smash that bell button so that you'll be alerted and notified of new content that comes up here. So it's not only the hot stock panels, there's a lot of content that we put on the YouTube channel. If you want to stay on top of that, by all means, do so. One thing that I'm inviting people to do this year for the YouTube channel, and I'm thinking that Clayton should think about doing this as well, invite somebody. All right, the YouTube channel is free. If you like the content that you see here, invite somebody to come to the YouTube channel. Give them the opportunity to decide whether or not they want to subscribe to the channel or not. But you could change a person's life, especially in the investing world, if you invite somebody. So I challenge every one of you out there this year that when you do come to a YouTube event here on YouTube, invite somebody. Each one, invite one. I think that that would be a good thing to take a look at. We will be giving away a mug today. The cutoff time is going to be at 2:45. The keyword is mug. Sigh, we're going to watch the chat just go ballistically crazy. If you want to be in the, Joff was the first one, interesting. If you want to be in the drawing for a mug, do I have one of my mugs sitting over here? Joey, why do you always take my mugs? I don't have a mug.
You have everything else in here.
By the way, Joey is our producer. Say hi, Joey.
Hi, Joey.
All right, so we got if you want a VectorVest mug, we're going to give one away. And if you are not a winner of the mug, if you look below the video, we have our store. You can get a shirt or a mug and purchase it. All right, so the mugs are coming across the screen big time. I knew it was. Did really somebody put a VectorVest VV mug for life? Really? Why did you take it away? All right, so VV mug for life. But at 2:45, Joey will pick a name for us to give a mug away to. All right, now we're ready for the stock picks. I'm already 4 minutes ahead of schedule. Look at that. I'm 4 minutes ahead of schedule. So thank you for the chatting in so far. Let's bring us all on so that we can take a look at the stocks. If you go over to our watch list that we've got set up for today, what will happen is each one of us will talk about the stocks in this list, our stocks in this list. We'll give each other an opportunity to talk about a value add to the pick. You know, we may not all like the same pick, and that's fine, but we'll give our own insights behind it as well. All right. So these are the 7 stocks for the new year, starting from Tesla all the way down to XROF. Each one of us will give our insights on the stocks. And I'm going to start off first. And the 2 stocks that I picked, I think were germane to the existing situation in a changing administration. All right. We know that on the 20th of this month, we'll have a new president. That ain't political. It is what it is. So in case anybody's jumping all over me, blah, 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 don't care. All right. It is what it is. And with that information coming up, I think that there's going to be 2 industries that are going to be rocking and rolling. As we've already seen, the clean energy space has been moving, so I picked a clean energy stock. It's going to be interesting. It's not the clean energy stock that you probably think I should have gotten into, but that's beside the point. And my other stock is we're looking possibly in the future for a decriminalization of marijuana. Say decriminalization 10 times fast. Patrick, can you say it 10 times fast? You can. Don't say it anyway. But I think there's going to be, I think there's going to be a push for decriminalization of marijuana. So my second stock was GRWG. I'm going to start off with Daqo. Now, interesting, when you think about right now clean energy, most of us keep thinking about the EV space, the electric vehicle space, because there's a lot of action going on in that industry. But wait a minute, clean energy is not just electric vehicles. Clean energy looks at things like solar, like wind, like water, all renewable energies. And DQ is in a different space within clean energy, specifically looking at solar. They create a polysilicon for solar cells. And as you look around your neighborhoods, I don't know about you, but I'm finding more of my neighbors have solar cells on the top of their homes. And I think that that's going to be a recurring something that's going to happen more and more and more and more. Thus the reason why I think from a good pick for this year, solar energy outside of the EVs and all of that, I think you should start looking into solar, wind, water, all of the other renewable energies, because this will be the year that they should take off. And as far as it's a green energy play, and I think a good word to look forward to going into this year is going to be environmental infrastructure. I think that those are going to be hot words for this year. Environmental infrastructure, all right? Because you're going to have to build the wind farms, and you're going to have to set up all the ways of utilizing water, and of course with solar. So Keep those words in mind. As I look at DQ, the stock is trading at $77. We assign a value of what we feel the stock is worth, and it's sitting at 101. This is one of those stocks that is an undervalued stock, which is, in this case, a little hard to find because there's so much money in the stock market. Money goes where money grows. Nobody's putting money in the bank because interest rates are so low. So interesting to find a good stock in that industry that is actually undervalued. Then we look at our other indicators, our core indicators like relative value, a stock's upside potential as compared to a AAA corporate bond. All of these indicators, RVRS, RT, VST, and CI, are all cast on a VectorVest scaling between 0 and 2, where above 1 is favorable. Relative value on DQ sits at 1.46. This tells me that this stock should outperform a AAA corporate bond by 46% over the next 1 to 3 years. For good stocks to look at, relative value is a good indicator to look at. Good upside potential. And I think that going into 2021, you want to find stocks that have good upside potential. Relative safety is an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. It takes into effect all of the things surrounding the financial health of the company. And on that scale between 0 and 2, above 1, the stock is not a risky stock as well. And key, RT. It's relative timing. This is our technical indicator. RV and RS are our fundamental indicators. Relative timing tells me if the stock is going up or down in price right now. On that scaling between 0 and 2, the stock is definitely in an uptrend. The higher above 1 it is, the faster in an uptrend it is. So that was one of my picks for a lot of the different reasons that you see here. Undervalued, good upside potential, not a risky stock, going up in price. Our master indicator, VST, which looks at the value, safety, and timing into one indicator on that same scale between 0 and 2. Notice that in this list of 7 stocks, DQ happens to be the second highest stock by VST. So that's a good all-around stock. CI is the comfort index, the stock's ability to withstand long and lengthy price declines. Every stock goes down. Right? High CI stocks tend to go up more than going down. So that's a good perspective of a stock that's got a consistent movement up. Earnings is the engine that drives the stock's price higher. DQ has an earnings per share of $3.56 on a $77 stock. That's not bad at all. And they grow their earnings at a clip of 22% a year. When we look at the earnings number in the VectorVest software, anything that's got earnings in it is projected out 12 months. It is a forecasted earnings. Why is that important? Because what I'm saying as far as earnings per share on DQ, at this time next year, their earnings per share should be sitting at $3.56, and they're growing it at a clip of 22% a year. Stocks a buy. So that's my first analysis on DQ. GrowGenerations. This is in that space of marijuana stocks. You got to grow it, right? You got to have the tools to grow it. They retail hydroponic and organic gardening products. So in order to have a good crop of marijuana, you got to grow it, right? And GrowGeneration provides all of the tools needed for growing good weed. I guess that's for the lack of a better word. I mean, you don't want crappy weed. You want good weed, and GrowGenerations gives you the opportunity. They sell lights. They sell the nutrients, the growing systems, the seeds, the humidifiers, the dehumidifiers, timers. You don't want it to be too hot, too cold or something, so you got to put the right time. You got to time that stuff.
How do you know all this stuff?
Listen, don't worry about how I know this stuff. I heard it from a friend.
Okay.
All right, I heard it from a friend because I don't know about this personally or nothing. They also have hand tools so that you can dig up the right way. You got to dig down. Listen. And then they got water pumps and irrigation systems. So everything that's needed to grow a good crop of marijuana, GrowGenerations provide. You know what I like to look at GrowGenerations of? The Lowe's of marijuana. Think about that. That's the place where you go to Lowe's and you get all the stuff for your house. Well, GrowGeneration is like the Lowe's of marijuana, so you can go to one spot so that you can grow a good crop. So that's what GrowGeneration does. Now, interesting, as this field has been growing. It's been outgrowing its value. It's been moving up so much higher than what we feel that it's worth. So this one, unlike DQ, is an overvalued stock. Doesn't make it a bad stock. It just means that people are willing to pay a premium for it. Why? Because of an administration change and knowing that there's a possibility of decriminalizing marijuana, people are jumping into it. Jumping into it, driving the price higher than its value. That's why the stock is overvalued and people are willing to pay a premium to own it. Relative value, the upside potential on it, not as good as DQ, but definitely above the value of 1. Telling me that GrowGeneration should outperform that AAA corporate bond by 29%. Safety, not as safe as DQ, but still at 1.06, above the value of 1. A lot less risk involved in inviting and getting into a stock like this. And look at that. RT does tell me that the stock is going up in price. The VST makes it, out of the 7 stocks, it's number 4, all right, on that master indicator, and the stock definitely goes up more than it goes down with that comfort index. Look at this, though. They grow their earnings at a clip of 43%. Now, I like the earnings per share a little better on this stock, $3.56 compared to that $76 price. On GrowGeneration, trading at 47 with an earnings per share of 39 cents. Not as good, but still in the positive. And they're growing it at a clip of 43, which means that it could only get higher. It should only get higher, and that stock's price should rise. So those are my 2 stocks. I'm going to go look at them on a graph now. I wanted to give you a basic understanding of why I like those stocks. Again, 2 hot industries coming into this administration. I think a lot of money can be made looking at these 2 stocks. So I'm going to right-click. I am going to view the stock graph. All right, so now you know why I like it. I'm going to keep it on a 1-year graph, and I'm looking at some specific things on my graph. 1, a good middle-of-the-road moving average. I'm looking at a 20-day exponential moving average. Notice that as the stock's price goes up, it serves as a really good line of support. Today is a down day. Would I buy it today? No. Do I like it long-term? Yes. But I would time the trade. When would I get in? I'd get in about 12 cents higher than that high. The high yesterday was sitting, that's not yesterday, that's yesterday. The high yesterday was sitting at a price of $85.54. I would put in a buy stop order at $85.66, which is 12 cents higher than the high. That would be a good entry. And you know something? A graph is worth 1,000 words. The graph is definitely moving from the bottom left to the top right, a little bit of a sideways move here, but look at that stock's price clearly above the 20-day exponential moving average, down day to day. Volume is pretty steady. I'm going to take off relative timing. These are the other things that I want to look at as far as the stock. Look at the earnings per share. Rising. Look at the earnings growth rate, rising. Look at the stock's price for the most part, rising. And look at even the pullback on the stock. Utilizing that 20-day exponential moving average is a good opportunity to tell you that the stock has still got some upside. Now let's talk about it on the other side. When should I get out of the stock? Well, I think a good rule of thumb to getting out of this stock is still utilizing this 20-day exponential moving average. If the stock's price closes below it, that's a good opportunity to take your profits off the table. All right, so DQ in the clean energy, specifically for solar, I think that that's going to be a hot industry going into the year. That's why I liked it. And now I'm going to allow Patrick, or let Patrick take a look. Tell me what you think about the stock, Patrick.
I like what I see. I would use that pullback to that double top it had just about a week or 2 ago, as a potential entry into, maybe a small position, and keep an eye on that support floor that you have there even lower, because clean energy's been on a run all throughout 2019 or all throughout 2020, coming into this year, and it's still continuing to run. So eventually people are going to say, hey, I've got really good profits. I'm going to start booking it in, and you're going to see a significant pullback. And that could be, if it hits that second level of support all the way at the bottom there, that could be, the real big buying opportunity to capture some really great gains.
All right. Clayton?
Oh, yeah, Glenn, I actually, when I was going through and looking at which stocks I wanted to bring to the table today, DQ was one of them that I was like, oh yeah, I could definitely use this stock today. So I agree. This is an excellent stock. It could prove to be an excellent opportunity. I'm not really hoping or looking to see a pullback that far down, back down to around the $40 a share range. I think is where that support and resistance line was, or those two levels of support now. But like you said, you definitely want to see this stock hitting a new high. We're not going to recommend buying a stock on its way down, because if we do, that's like trying to catch a falling knife. You don't know exactly how far back it could pull back, and we don't want to get into a trade where we're losing right from the start.
All right. So that's stock number 1. I'm going to get ready to go to stock number 2. There's GRWG. Same kind of scenario. Look at that move, bottom left, top right. Notice that both of my stocks, I am looking at 1-year graphs. I think it's ideal from the situation of trying to look for stocks to buy going into the new year. Now, interesting about this one, 2 down days in a row. All right, coming off of that high, would I pull the trigger on it now? No. I do like it long term. Again, looking at the long-term 1-year graph on the stock, I do like it. Good move on the 20-day exponential moving average. Keeps you in that trending stock. Even as it comes back to that line, I still like it. Same kind of scenario. I would go to that most recent high of 53 to 43. I'd go 12 cents higher than that. I'd put it in my buy stop order. The stock historically over the last year has definitely been moving up. Now, a couple of things that do catch my attention. Well, one main thing, the earnings growth rate, positive as it is pulling back just a little bit, but still higher than it was a year ago. All right, so I do see that. But the earnings per share itself is still growing and getting better. But the earnings growth rate, I'd like to see it continue to grow, but definitely healthily above where it was 1 year ago. So I like that entry point. Again, I'd look at 12 cents higher than the high. If there's anybody out there who's in it, I would use either the 20-day exponential moving average as a way to get out, or if it goes below this support level of 36.78, that's probably another good opportunity to get out of the stock and take your profits off the table. But right now, I would wait for the stock to go 12 cents higher than the high. But there's probably many of you who are currently in it. I'm giving you the opportunity to know how to not give your winnings back right now. All right, Patrick.
Yeah, so before we take a look at this, you said this was like the Lowe's of the marijuana industry. You do realize Lowe's is number 2 behind Home Depot. So who would be the Home Depot there?
No, I'm a Jimmy Johnson racing fan, so it's the Lowe's of marijuana.
Oh, okay.
No. Oh, yeah. That is strictly because of Jimmy Johnson. All right. So I'll put that out there. That's strictly because I'm Jimmy Johnson fan.
Fair enough.
Okay.
All right. So only thing, marijuana has done obviously really, really well since the election. I like the play. I think still at this stage, it's still a buy on the rumor, sell on the news kind of trade. Doesn't mean you can't take advantage of it for now, but like we saw when Colorado started legalizing it a few years ago, we had a bunch of people, pushing prices higher in the marijuana industry. And then it tanked after that because they realized there was no actual fundamental growth behind it to back it up. Even if they do pass legislation, which is very, iffy this year, I think that, it's going to take a while to get those numbers to back up the price that it has. So this would definitely be a, great trade for now, buy on the rumor and sell on the news kind of trade.
All right. Clayton?
Yeah, I just want to point out this stock's, obviously it's been performing extremely well over the last year. If we just look at the equity curve, bottom left to upper right, but even more so, Glenn, I think you got it's a 20-day exponential moving average on there. I mean, look at the level of support that moving average is providing. Every time it touches it, it shoots up a little higher and comes back down a little bit and shoots up. So if we do see this, if we do see GRWG pull back and touch that level of, well, I want to call it support, but touch that moving average again, and we start to see it bounce off, that could also be a pretty good entry point to get into this trade.
All right.
And Glenn, one more thing.
What?
What's the volume is always what? What do we say in jockey
Volume
club?
is conviction.
What has volume been doing recently?
Moving
Ever
a
since that
tad
big
bit
spike up
sideways,
ahead?
Patrick.
Be careful of that. That's the one thing that also concerns me is that volume, it had a big spike a while ago, but compared to what it was at these prices, volume is definitely a lot lighter than that first initial run up.
I'm going to throw a 20-day exponential moving average on volume. I think for the most part, you're right. I'd like to see volume rise, but it's staying in line.
But go back to that 1 year.
That's when it spiked. Then you're probably talking about Colorado and stuff at that time. That's when it spiked. But even overall, it's okay. I'll leave it that way. It's just okay. So